following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Two, three. No sound here. Good, go. Okay. No sound on my end. Hey, sorry about that opening, folks, here. We got a little technical difficulty, so hopefully you can hear me, but let's go ahead and get this thing started by saying good afternoon from TFNN. Welcome to the March 30th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I just past 1 o'clock in the afternoon. I also want you to know that I'm grateful for your presence here, but more importantly, I'm here to serve you. So feel free to call on in 877-927-6648. Internationally, 727-445-1044. Of course, you can send me an email, steve@tfnn.com, and ping me inside the Tiger's Den. Would be happy to take a look at and provide you with whatever information it is that I can. So let's get this wonderful Wednesday show kicked off. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow trading up 55 points. She's trading at 17,688. S&P is up 7 points at 2061. NASDAQ Composite is up 16 points. After a big day yesterday inside the Russell 2000, she's just gone to a slightly negative. We'll call it the break-even status, trading out at 1109. You've got gold trading back $8. Silver's off 1 penny. Light sweet crude is about flat out here, trading at 38.25. Lead the charge here to the upside for a second day in a row at this time, dollar-wise. It is Priceline. Not up big like it was yesterday, up $6 and a little bit of change out here, up about 0.5%. Google's up 1%, up 750. Lululemon is up 10%. That's up $6. Chipotle's up about 4. Amazon is up about $4 as well. To the downside, you got Regenerate Pharmaceuticals off nearly 2%, down $7, less than 7. You've got the Intuitive Surgical off $5, a little less than 1%. Variant Systems, that's down about 12.5% out there. That's taking a walloping. You've got about 5.4 million shares. Ticker symbol there, VRNT, off of $4 and change. So let's go ahead and begin here. And let me just do this here. I got to type in a message. Give me one moment here. Then we'll go right to it. There we go. Okay, so let's go take a look at what are the markets doing. You know, Janet Yellen, she used that terrific language yesterday, which is means everybody's out there interpreting. But one of the pieces, one of the things that she said was overhead risk. So let's go look for some overhead risk out here. And if we're going to tell the future, let's go take a look at the daily equity futures contracts for the S&P, the Dow, the NASDAQ, the Russell 2000. Get a feel for what it is that they are communicating to you and I. So as we do that, we're going to flip over to that chart. You're going to see 4 quadrants if you're watching us on TigerTV. The upper left-hand quadrant is the S&P futures contract. The ES, the upper right, the NASDAQ futures contract. NQ, lower left is the Dow, YM, and the bottom right panel is Russell 2000. Letters TF out here. If we take a look at let's first look at what we got up here. You're going to see some green lines and blue lines. What do those lines represent? Those are provided to us by our good friends over at TAS, our TAS market profiles out here. And what we can see here, and if you're watching on Tiger TV, if you just look to the data box, my cursor's over here on the right-hand side of price. Don't pay attention to the date. What it's giving you is giving you the current market profiles. Now, this morning, really, as we came back, as the contract reopened last night at 6 p.m., the ES Mini went ahead and moved above both the weekly point of control. That's here where buyers and sellers are most comfortable with price, and it got above resistance. It got above the daily market profile high. Now, that level is 2047.50. That's a number you want to be watching. If the ES Mini closes above that level, there's no reason for it to not run up to the 2095 area. Now, what we can also notice here is right now, you've got the ES Mini trading right into the swing point from December 30th. Right? That's really where the move to the downside from December 30th, really through that February 11th timeframe. December 30th is where it all began. So you've got 100% move of a move. Does not mean that price cannot go higher, but this is this is an area where price can stall. It's very important for the ES Mini to stay above that 2047.50 level. If it closes below that, and we'll go take a look at short-term charts to figure out if the if is even a possibility. Of course, there's always a possibility. But if it closes below that, then you would anticipate that the ES Mini would pull back to about 2030. Probably between 2030 and 2021 would be the levels that I would be looking at. As we go back here now to the four-screen view, what you're going to see in the upper right-hand corner, you're going to see the NASDAQ. I won't blow this up. I think you can see it in HD here at TFNN.com. And what you can see is price this morning ran right into the bottom of a weekly profile. So that is resistance at this stage of the game. So the number to be watching here is 46.99. So you've got prices run into resistance on a daily contract. In the case of the Dow, lower left out here, you can see that it didn't make it all the way up there, but pretty darn close to that green line. You can see the point of control, little dashed line out there, is closer to the solid line, that upper solid line out here. That says that that's where the sellers are very comfortable and that they are hanging out. That price level is 17,735. It doesn't have to hit it exactly. The actual high today has been 17,694. But that is what Janet Yellen was referring to as overhead risk out here. There's your risk. You've got some sellers out here. Now, in the case of the Russell 2000, nice strong day yesterday, got up over its daily profile, but guess what? Ran right into resistance earlier this morning, as it got up to the 1115 area. The actual level of resistance, again, now it's going to be the bottom of that weekly box out here. 1118 is the number. So it didn't hit it exactly. It doesn't have to. We use these as guidelines. That's what's going on the daily charts. Now we go from the daily down to the 30-minute chart to get a feel for what's going on, and more importantly, what it is that each of us need to be watching here. Is the market going to pull back further? Is it going to retrace? Is it going to get back more of its gains out here? Well, the NQ went ahead at 10:30 this morning, made a high here of 45.1025. And as it was doing that, it was doing it with low energy. I don't want to use low energy. That's a Trumpism. It was doing it with less relative strength out there. That's a term that you're very familiar with. And what did it do? Formed a little shooting star. Then we had a follow-up on the next session, even more follow-up here at 11:30. Here's the level we're going to be watching. We'll take a look at this when we come back from the break. The price point is going to be 4474.75. Any close below that inside of the NQ on a 30-minute basis, the markets are definitely going lower, a further retracement, because that is a hammer candle. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets.
The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So before we went to that break, we were taking a look at, we were looking at the daily equity futures contracts, and we went over to the 30-minute and took a look at the NQ. And as we did that, we identified, one of those topping and bottoming patterns, right? It's worked. We take a look at yesterday's session, and I was out of the office. It's really too bad, but didn't get back till just before my show. But yesterday morning, as price was moving lower, we're looking at the 10 o'clock time frame. The NQ was making a similar type pattern. It was moving lower, doing it with less relative weakness out here. Gave us a nice bullish reversal signal, went higher. And at this stage here, this is the first signal that we can see all these black lines on my screen out here. But the first time that we actually got a confirmation of this pattern was really right here at 11 a.m. At about 11:15 was when I had posted inside the Tiger's Den that we got a confirmation of a short-term top and that price would go down and test the 44.95 level. Well, no, actually, I said that profile wasn't there. It was right here at about the 44.81 level. Of course, since then, a new market profile has appeared. But what's more important is really the candle session that formed at 12 noon. Hammer candle on a 30-minute chart. You get to close below that level. You know the expression. If you're long, you're wrong. What does that mean? That says that price is going to pull back to some other level of support, maybe a retracement level. Maybe it's just going to be the TAS market profile that it had moved above. And if we take a look at the NQ, you can see that the daily out here, again, that daily high is at 44.18. That's only if we see a close below that hammer candle. Now, we also have a hammer candle inside the ES Mini, right? We know that the ES Mini out here is trading just slightly above that weekly point of control, the top of the daily box out here. The top of the daily box, by the way, where the heck did my data box go? The top of that box, again, 2047.50. And if we take a look at the 30-minute chart out here, it too had made that same pattern out here, gave us a real nice reversal signal at 11:30. Came just slightly after the reversal signal we looked at inside of the NQ. Now, in this case here, we can see that price is trading inside inside the ES Mini below its hammer candle low. Now, this candle does not complete until 1:30. So maybe it's just testing the bottom of that level, which is 2054.50. But if it does close below that in the next 9 minutes and 10 seconds or so, I don't know, maybe 9 minutes and how many? We'll call it about 10 minutes out here. If it does close below that, that says that price is going to move lower. Now, in the case of the ES Mini, right here, the levels that we're watching, right, it may just come back to that daily. Where did that thing go? Here we go. There we go. May just find support at 2047. But if it doesn't, and it gets below 2046, the level we want to be watching is 2041. And I'll have to redo the calculation at about 5:15 today. But if you close below that, it could actually be the topping signal inside the market. Now, when we say topping signal, I know there's a lot of euphoria out there, but look, let's just be a realist. You and I are here to trade technical patterns. That's what you and I are looking at. And we take a look at technical patterns out here. Today happens to be that seventh wave move, in the ball game to the upside, 100% move of a move, 30-minute chart that's showing us a potential topping pattern. We almost had it inside the daily, but depends on where the close would be today and what type of candle would form out here. But it just says there is what Janet Yellen was talking about. I believe she was talking about what was she called it? Overhead risk out here. Now, let's go take a look at something else that's really interesting to me. Let's take a look at, how we often look for divergent patterns, right? We often look for correlations is what you and I do. We look for correlations. When things get out of whack, oftentimes they can provide us with great trading opportunities and signals out here. This chart that you and I are looking at happens to be both the S&P 500 via the SPYs. That's on the bottom panel, the green lines out here. This, by the way, because it's a line chart, it's just the close of the session. And the upper panel happens to be the blue line is the I like to say that Guggenheim S&P 500 equal weighted ETF. Now, when there are divergences here, it is the equal weight that is giving us the message. Well, the interesting thing here, and this is right here about during the trading sessions of March 18th through, it looks like March 21st. In the data box here, I apologize, it's a bit smaller. But the actual highest closing high inside of the RSP, let me see, we've got 78.28.34, 78.32, 78.36 is the number. And we're trading at 78.34. Now, I don't know where this is going to close, but if this closes below 78.36, for at least today, we have a divergent pattern out here. That's assuming that inside the SPY that it doesn't close below 204.63. If it closes below 204.67 would actually be the, what was yesterday's close? 205.12. If it doesn't close below 205.12, then we would have a divergent pattern. Very slight little nuance out here, very subtle, but it is something to be paying attention to. We do not. How about that? How about if we say we don't? That sounds better. We don't have that same type of divergence here inside of the QQQ series. Oh, we do. Son of a gun. I take that back. In fact, this one here is more pronounced. Now, this is more pronounced here at 1:24 p.m. I don't know how the trading day is going to end here, but you can see at this, I don't want to grab that candle. That probably doesn't look good. Let's take a colored line. Let's take a red line out here. Notice how right now we have a lower high in the equal weighted ETF. And inside the QQQ series, right, we've got a higher high. So there is your correlation. Both of these should move in the same direction. Take out highs, roughly the same point in time. Now, how you use this is you have to have other reversal patterns inside of the market. So this could be nothing more than your weatherman saying, hey, you got a 70% chance of raining or something like that. Here's your 70% chance of rain. I don't really know what the percentage is out here. I know that you use this in correlation with other elements. We're always looking for when there are divergence of correlations that are out there. When things get out of whack, then they provide us with trading opportunities. And you can see this whole chart here is populated with a number of divergent patterns out here. Another one that I'm a bit, or bulls should be concerned with, liquidity issue. I know that the VIX is trading at lows for 2016. So that's a liquidity gauge, says plenty of liquidity. But the liquidity gauge that is not confirming that, come on, where are you? It's got to be right in front of me. I know I always say I should clean this thing up here. Where There we go. It's right there in front of me again. Here, it's what I like to use. The bottom portion of this chart is what's referred to as the ticker symbols HIO, Western Asset High Income Opportunity Fund. And the market does best when both of these are in correlation with each other. Now, in the case of, and you can see here, remember when everybody was worried that I lost my cursor out here. That's really weird. Man, having some weird things take place out here. Okay, well, that's interesting. Here, if you can just see the little crosshair, so to speak. You just can't see the lines. But as the market was moving down here back in February, this thing made a real nice bottom. Which is really important out here. Made a nice bottom. In fact, what we had was a lower low. I don't have the line drawn, but a lower low inside the S&P, but a higher low inside the Western Asset High Income Opportunity Fund. That kind of divergence said, hey, the market wants to move higher out here. But right now, you can see the bottom panel of that chart here has run into a bit of resistance. When this thing is moving higher, it's another way of saying there's plenty of liquidity. There's plenty of cash chasing returns out here. This is Steve Rhodes with TFNN. We got the Dow. She's up 65 points, and the S&P's up 6. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 63, S&P is up 7 points, Nasdaq Composite up 16, Russell 2000 still just slightly red out there. And before we went to that break, we were taking a look at the different sets of tools of different divergent correlations that I like to take a look at because they provide us with a statistical edge to help us understand what the market is doing. Do we have something that is confirming? I used to use GE, for example, in the Dow all the time to look for divergent patterns out here, and I haven't used it as much lately. With all of now, GE is up at all-time highs right now. It's trading out at 31.87. There's no divergent pattern here inside this. So rarely do we get everything that hooks up. Many of you know that for a long period of time, I always was looking at the euro, Japanese yen, as a correlating factor with regard to our markets here. It still works, but it hasn't worked as well as of late, and that's why I haven't really spoken about it too much. There's been other patterns out here that have worked, but we're looking for those divergent patterns to assist us in our trading investing. Now, a couple of months back, I introduced you to a tool inside the eSignal platform called the Algo Heat Map. That's what I've got up on my screen here, and that system uses a statistical arbitrage method to identify when different individual stocks are out of whack, so to speak. So no different than what you and I take a look at as we were looking at inside the equal weighted ETF for the S&P and the Qs versus the weighted structure for those vehicles. And again, those are not going to make a hill of beans until the end of day today before it gives us perhaps a first signal out there as to some caution. Now, the developer of this system, we're going to have him on here in just a second, Boris Kozin, and algo-lead.com if you want to go to his website to again bring you up to speed, as well as he's doing a workshop tonight if you through eSignal. We'll talk about that in a moment. But Boris worked at Standard & Poor's. He was involved with the development of the Hong Kong and the Singapore indices out there. He's got 15-plus years of financial service experience, wealth asset management. And the system that we're taking a look at, the great thing is this platform here that he's developed that's available to us on eSignal, is now available to individual traders like you and I out here. And these are the same systems that the big broker dealers are using out here. So let's go to Boris. Boris, how you doing this afternoon?
Thank you, Steve, for having me on again. I greatly appreciate it.
Hey, our pleasure, especially with regard to you and, some of the types of styles of correlations that I look at. One of the things, an interesting correlating pattern, and I mentioned to subscriber listeners yesterday that I would go ahead and take a look at it, is the correlation between light sweet crude and the stock market. Now, historically, if I go back to 2002, it has about a 56% correlation. What I mean there is just simply, and I'm referring to the S&P 500, folks, by the way. If it closes up, oil, light sweet crude closes up, then the S&P, a 56% correlation, it's not that much better than a coin flip. Now, over the course of the last 2 months, that correlation has been 75% out there. And so, it's a good correlating pattern. And when those two things diverge, when you've got, it helps you to understand where the markets are going. So you developed something that is way more complex than that. Why don't you tell our folks about the Algo Heat Map?
Yes, so the Algo Heat Map utilizes high-level mathematics to figure out the statistical arbitrage between each individual stocks. So what is that? That is, we take and we factor out all what we consider as the noise, the items that affect the price because they are correlated with their industry, their sector, their sub-industry groups. A great example of that would be, for example, let's say I was outside our galaxy and I was trying to figure out how fast the car on the Earth was moving. So I would take a look at the car and I would have to extract the rotation of the galaxy, the rotation of the solar system, the rotation of the Earth to get the speed at which the car is going. We're doing the same thing. We're using factorization to try and figure out the nuances, the real stock movement on its own, excluding all what we consider as noise.
Yes, and when you do that, folks, if you're watching us on Tiger TV, you can see my screen, and what I have up in the upper left-hand corner is the what's referred to as the heat map right now, where it identifies those instruments where there is something that is out of whack, an interstellar out of whack look. And this is changing. Is it updating of what, about every 30 seconds? Is that the?
Yes, every 30 seconds it updates because the mathematics behind it are complex, so we need some time to do the calculations.
Sure.
And,
so you now. And what folks are looking at, excuse me, Boris, what folks are looking at, so this is covering all of the individual stocks with inside the S&P. Is the S&P 500 or?
No, it's closer to the Russell 3000. So it's the.
Got it. Okay.
Yeah, it's every stock that has a stock market value of 5 or greater, and currently its market caps of 250 million or more. Even though we do allow for smaller market capitalization, that's because once in a blue moon you do have events like 2008 where we had Citigroup drop to 87 cents.
Sure.
It can happen. It does, so we allow for it, but we only look at companies that have $5 price and higher than 250 million in market cap.
So in that entire universe of stocks, folks out here, what you're looking at on my screen here is you've got it's broken down between those stocks where you're getting long signals that are suggesting that there's an opportunity to go ahead and play the stock to the long side. This is it can be used from an intraday standpoint. I'm going to have Boris cover that as well, or it can be the beginning of the day, end of day, and then it's color coded to identify those instruments where you've got the largest opportunity. Right now on the short side, so the right hand side of that is the short side, a stock ticker symbol PNK, which is Pinnacle Entertainment, which is up at its highs right now, high of the day of 35.17, has popped up on the screen in that kind of that light blue code out there, color where it says 2.0 to 3.0. Why don't you tell the listeners and the viewers what it is they're looking at there?
So based upon our historical analysis, when you exclude the noise, the stock has, and you can see it was right on the edge, and it just now dropped to the lower level. So it was probably right exactly at 2, and now the signal is showing that it's still a sell. So in other words, it's reaching its high, and based upon historical norms, it's a little bit overpriced. You should be selling the idea, barring any news that has occurred right now that might be influencing a significant move forward. But the signal again is not significantly strong. It's right in the middle. So we're expecting it in the short term to come down to reverse and come to the mean, so that it will be back in line where it was historically.
Perfect. Hey, Boris, can I get you to hold on through this break here, and then we'll come back. We'll go ahead and wrap this up and tell people about the workshop that you're doing this evening, how they can get in touch with you, and the free offering that you're providing with the Algo Heat Map. All right, so when we come back, folks, we're going to go back to Boris. We'll go ahead and wrap this up. And this is Steve Rhodes with TFNN. The Dow's up about 59 points. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 67, S&P is up 7. We're going to go back out to Boris Kozin of algo-lead.com. We're taking a look at his amazing statistical arbitrage system. That in Boris, this is designed. Tell us who this is really designed for. How does somebody who goes to has a job 9 to 5, 8 to 6, outside of the market hours. How do they use this? And then how about those folks that are intraday traders? How do they use a system like this?
Right. So people who can't trade during the day, they would come in, they would take a look at what the signal is indicating, and they would buy, and then they would tell their broker-dealer program to sell at the close. So
okay.
Based upon the
and they get those signals after the market close
or the overall. They would buy whatever they feel comfortable with, the number of stocks, depending on what kind of signal they're looking for, and they would tell it to sell at the end of the day. Now, people who can trade during the day and this is a great tool. It gives you the indication of which stocks are overpriced or underpriced. You can take a look and trade intraday based upon the strength of the signal. And, if you trade and things are not, they're moving, out of back into what they were historically and the signal isn't as strong, you trade out and you should get a significantly better results active trading with this program than you would if you buy in the morning and sell in the at the close. But as you can see with these returns, this is the performance based upon just buying in the morning and selling at the close.
And for those of you folks that aren't watching Tiger TV, you can see that through yesterday, if you just simply were using the buy at the open, sell on the closeout here, you would see that the performance here for the algo-lead heat map system about 5 3/4% versus the S&P just slightly over about 0.5% out there. So it's the reason that I wanted to share it with you. And folks, if you'd like to learn more about this, Boris is doing a workshop tonight. If you just simply go to the eSignal page, just their main page out here, you'll see a tab that says Education. Click on that. Go to Webinars. When that next screen comes up, what I want you to do is go down to, I'm waiting for mine to come up. There we go. You want to go down to Partner Webinars, just below the real big banner out there. And under Partner Banners, Partner Webinars, you'll see trading ideas using the algo heat map. You can register. It's tonight from 4:30 to 5:30. And Boris, thanks so much for spending time with us, and best of luck with tonight's workshop.
Okay, thank you very much, and looking forward to being on your show again soon.
You bet. Thanks so much. That was Boris from algo-lead.com. Now, I have got a request here to go take a look at light sweet crude. And this is for Danny in Atlanta. And he wanted to take a look at light sweet crude on a 30-minute and a daily chart. Now, we talked about, as Boris and I were speaking, we were talking about correlations, or when things become uncorrelated where they should, looking for opportunities out here. And as I mentioned, over the course of the last 2 months, between 75% to 80%, but for the entire month of February, it was a 75% correlation between the directional price of light sweet crude and that of the S&P 500. And the same for March through yesterday's trading. Now, here's a 30-minute chart. You can see the upper portion of the chart here is the ES mini. Bottom portion of the chart happens to be light sweet crude. So look at how they make. Look at the price direction. This is not a tick for tick type of situation out here, but just look at the directional correlation. You had light sweet crude actually make a high, came in at 1030. That same high was just a few moments later inside the ES mini, and it then since sold off. Now, with regard to, Danny, what you're looking for on the 30-minute basis, here's what we know. When we take a look at the market profiles, those are the red boxes, by the way, on my screen, what we can see is all the way up into that high out here that came in between 10:30 and 11 o'clock, you saw new market profiles that were establishing at higher levels. That's a message of bullishness with regard to, what buyers and sellers are doing. We saw a bit of a wide-ranging bar at between 11 and 11:30 here, close below the 30-minute daily profile. Now, if you were trading this intraday, that would have been your signal, if you had not already been stopped out of a trade, that you might want to go ahead and take your profits at that stage. It could also be a message of going short, depending on what type of trading style you would be using. You'd probably also want to look for what's going on between the correlation of the S&P as well as the S&P. Remember, we looked at the 30-minute chart here for the S&P and saw a topping-ish type pattern out here with a pullback, and we had a hammer candle. We do see that prices closed below that, so that's not necessarily a good thing. What you would be looking at is where would it be that light sweet crude could pull back to? Well, here we've got a little green line, a little dotted green line on my screen out here that's priced out at 37.76. That happens to be the weekly TAS point of control. That's the level where you would look for support to form. And so we can look at a 30-minute chart here and still get information about what's going on daily, even though it's a weekly point of control out here, because there are no daily profiles that are near where price is trading. In fact, the lower profile inside of light sweet crude is at, 39.62. Now, we are trading below that level. So that is not necessarily a real positive thing out here. But you would also be watching what's going on inside the ES Mini. Does light sweet crude continue lower? Does the ES Mini? And what happens when the ES Mini gets into this 2047 area? You can see you've got these lines of support out here, these horizontal lines of support inside the ES Mini. So, Danny, I hope that helps you out with regard to light sweet crude, what it's doing on a daily time frame. Just simply take a look at those horizontal levels of market profiles out here and the correlation between the S&P 500 futures contract. If we go take a look at what's going on inside the advanced decline price oscillators out here, those happen to be the bottom panel of our chart. They are still bullish. We saw the New York Stock Exchange dip below that zero line, however, so slightly for about 2 trading sessions yesterday, clearly moving higher. In order for the market to give you any kind of real bearish message today, you really need to see that get below that zero line today. I give it an extra day, tomorrow out here. If you were to see a failure today, and I don't know that we're going to, I don't think that we're going to, but I don't know what's really going to happen in the next, in the next couple hours out here. If you were to see a failure today, that's kind of like a cataclysmic failure signal out here. It's subtle. Most people wouldn't necessarily catch it, but we're not there yet. right now, the way that things are set up is that prices want to continue to move on to the upside. Intraday, there's a struggle out there. We were able to figure out where that struggle was. So that's what's going on with those advanced decline indicators out here. If we look at gold. Gold? Did I mention? Yeah, I think we didn't. Gold. Okay, let's take a look at an important price point for gold out here. It's just 30-minute charts have been working really well. So let's take a look at gold. It too has a hammer candle out here, and that formed right here. This is at the end of an A to B equals CD. If we take a look at that pattern out here, if you're a short-term trader, the signal is that you got a buy the D point. And that was right here. You can see the price projection was 1224.50, and you got that hammer candle. Now that low out here, which we'll take a look at when we come back from this break, that price point is 1223.40. Very important price point for Goldilocks. Steve Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up about 85. S&P is up by 9. Earlier, before I began the show, someone posted a comment in the den and referred to me as a Rhodes Scholar. Now, The only thing that is scholarly about me is that I spend each day trying to learn something new out here. And I hope that you're doing the same. And today's a great opportunity to do that. Talk about an opportunity to spend some time with Basil Chapman. He's doing a workshop tonight from 6:30 to 8 o'clock. I believe he's doing a 90-minute workshop. Now, that workshop is for subscribers only. That's an easy thing to do here at TFNN because you just come over to our homepage, you sign up for it. You've got a 30-day trial of his newsletter service out there, and you gain access into the workshop. And the nice thing is here at TFNN is even if you can't be there because you have some other engagement this evening, is that workshop is going to be archived, placed on your members page for the next 30 days out there. So, be scholarly and do that. I had a good friend that once gave me a set of golf balls, a dozen golf balls out there, and he had imprinted on it, Steve the Rhodes Scholar and some other stuff. And the only thing that was really I thought about that for a while, and the only thing that was really scholarly about those balls for me was my decision to not actually go ahead and use them because I couldn't deal with the idea. Especially at this club, I couldn't deal with the idea, which has a lot of water on it, hitting the ball into the water, somebody happening to fish out the ball, and then returning it to me and say, yeah, you're real smart for hitting that into the water out there. But look, a great opportunity to advance your education. So come over to the homepage at TFNN.com, sign up for Basil. The Rhodes Scholar, by the way, I didn't learn this until I visited Basil's home country of South Africa. And actually, the Rhodes Scholar was formed by Cecil Rhodes. Cecil Rhodes had a big influence. Some will say positive, some will say negative. He's from the diamond industry out there, so we won't get into that. But he's the actual individual, my long-lost relative, who's really not a relative. Too bad. I wouldn't mind having a relative who was one of the founders, in essence, of the diamond mining business out there. But he is the one. He didn't have any kids. And he's the one that actually started the Rhodes Scholar out there. Okay, so back to the markets. We were talking about the gold contract. We're looking at a 30-minute chart out here, and we know that what gold did was it formed a buy the D point. That's one of the workshops, one of the tools that you and I look at. That one of the tools, and we saw we had a nice hammer candle. Right at the 1-to-1, A to B equals CD, nice little bullish engulfing candle that formed. Well, that hammer candle is really important because you get a close below that. It just signals to you that price is going to pull back further. Where? Well, at least go do a 100% move, get back in that 12-16-ish type area. Got some emails yesterday while I was out asking me, with gold moving higher, have I changed my take? And the answer is absolutely, positively not. Gold is still headed lower out here. The next level of support, 1214, that hasn't been broken yet. That's a little different. We're looking now at a daily chart here for gold. But gold's going to make its way down into the 1143 area, maybe 1123. We'll take things one day at a time. But yesterday, all that was going on was those smart money, large commercial traders were licking their chops, selling into everyone that decided they wanted to buy gold. What they did last week was they upped their net short position as a percentage of open interest. I won't know until Friday of this week if, in fact, that's what they were doing through yesterday. But the cool thing about yesterday is the data that comes out at Friday at 3:30 is as of Tuesday's close. And we know that we'll see, were they the ones that were going ahead and selling all of that gold to everybody who wanted to buy it all the way up? Hey, stay tuned, folks. Our man David White, he's going to be up next. And because it's Wonderful Wednesday, we've got the Tom O'Brien Show from 3 to 5. Don't forget Basil's workshop from 6:30 to 8 p.m. this evening. Have a great Wednesday. I'll see you on Terrific Thursday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.